counsel, and again, the way this worked, and I'll say this very quickly, or we're going to run out of time very quickly. Basically, we bankrupted, or the lab subsidiaries were bankrupted in bankruptcy court. All right, not the parent company, not ProPhase Labs, only the subsidiaries. In bankruptcy court, you have expedited trials. The goal is to get the laboratories or the subsidiaries out of bankruptcy quickly. That's why in bankruptcy court, you don't spend a lot of time in pleadings and pre-trial. And so basically, Crown went to the insurance companies. You do meet and confers. If they don't want to settle, you go straight to litigation. Crown has this fine-tuned to a science in terms of their AI programs, and they'll drop 200 pages of discovery on the CEO of the largest insurance companies. They don't want to litigate. So I am very optimistic that we're going to have collections coming. It's going to be significant. It's going to significantly change our company. And to bridge the gap until we have the liquidity event of those settlements coming into our company, we may finance. If I bring in a significant financier, that will completely change the outlook of our company. It'll take the overhang over potential dilution and all these things that shareholders are worried about. So let's move on. I can go on to more about Crown in our Q&A. All right, and I want to make sure I'm going to have to move quickly here. Our Be Smart initiative, we came out with a press release saying we're looking to sell our strategic partner. The bottom line is this is, we believe, one of the best, if not the best, esophageal cancer diagnostic to come out on the market going forward. It complements the endoscopy. If you're at risk of esophageal cancer and you get an endoscopy, this will make the diagnosis more accurate, particularly with people not at risk. If you're not at risk and we report with almost 100% accuracy that you're not at risk, you don't have to get regular endoscopies. Right now, insurance companies are reimbursing billions and billions of dollars on unnecessary endoscopies. At the same time, you have patients walking around worried, am I going to get esophageal cancer? Am I going to die of it? At the same time, if you test positive, you know you're definitely positive. If you test positive with our test, go get what's called an ablation. It destroys the precancerous cells and saves your life. So in all the people that test positive, it will save their lives, saving billions of dollars in insurance costs, as the person, which is obviously an awful situation. But either way, you test negative, you test positive, you save billions of dollars, and you save lives, and you give patients who are not at risk peace of mind. It's really a great test. We believe it's ready to be commercialized. We think the best way, smartest way for a company to do this is to partner, either joint venture it and leverage somebody else's distribution, or potentially sell it and get a royalty, get a big block of money up front and a royalty. It's a potentially very large liquidity event that could occur for us in the coming months. Okay, that's our Be Smart esophageal cancer. These are numbers. You can go through all of this on the website. And finally, we have so much information on this. It's not funny. It's really a great test. Our Nebula Genomics business, I'm not going to go into too much detail, except that it was completely restructured. We shut down the lab with almost no marketing dollars at all. It's generating really nice revenues. And quite frankly, on a standalone basis, it's probably profitable. Certainly on a pro forma basis, it is, because we also have a new subscription that people are renewing, and it's a 1 year instead of a lifetime. And so we get subscription renewals going forward, which is going to add profitability to this business. It's a very attractive business. We think we can grow this significantly if we have the working capital to do so. So those are the three businesses. I could go into a lot more detail on each. That's our management team, investment highlights. And again, we sold the manufacturing facility. We shut down the Nebula Genomics laboratory, significantly reduced overhead this past year. We're all systems go. And, let me just address a couple of things that are not on the slide, which is we went through a $3.8 million convertible debt that was converted. Most of it was converted literally the day before we did the reverse stock split. It was really unfortunate situation. The bottom line is, more than 20 million shares of stock, I believe, were converted in that one day in just a couple of hours. It was really an atrocious situation for us. And so when we did the reverse stock split, then people got worried that we were going to be delisted from NASDAQ. So people started selling, plus you had the overhang of all the stock that was primarily sold into algorithms. So it created a very ugly situation. And basically, we have a stock where our company has roughly 3.8 million less debt. So if you think about it, our capital structure actually improved. Our shareholders' equity actually improved by $3.8 million that day, all other things being equal. And yet our stock's down, 90% or whatever it is. So it's really an unfortunate short-term supply demand situation as opposed to an underlying fundamental situation. Once we have a liquidity event, all of this changes. So I'm sure I'm running over time here, Craig. I thank you all very much. Why don't we go to the Q&A? And in the Q&A, I'm sure we're going to address all the things that I've gone through very quickly here.
Absolutely, Ted. Press the Q&A button and type in your question. The Q&A button is at the bottom of your Zoom window. We can only take your written questions today, so please do not use the raise hand button, but by all means, use the Q&A button. We already have several questions, Ted. How many
Okay.
settlement dollars, how many settlement dollars have been collected in total since the Crown Initiative started?
Sure. And let me just say, the reason we're just doing written questions is we had so many written questions coming in. There's no way to get to all of those plus the other questions. I can't believe the number. We're inundated with questions. We will do the best we can to answer as many of these questions as possible. So in terms of Crown settlement, understand this has been a long-term process, this past year in working with Crown, but the critical component of it was when we decided that the subsidiaries were going to be bankrupted. We had a whole procedure for several months in bankruptcy court for them to be accepted into bankruptcy. Once they were accepted into bankruptcy, then Crown Medical had to be appointed special counsel. That just happened roughly 6 to 8 weeks ago. So once that happened, Crown Medical then started reaching out to some of the insurance companies. That number has grown and grown and grown. They have approximately 1,000 insurance companies to actually go after. So several hundred were approached, quite some time ago, and that number keeps increasing. The number of settlements or companies that are in settlement negotiations is increasing. We last reported it was over 50. That number is growing. Once we have substantial settlements, it will be reported to the shareholders. It's a sort of premature to expect a lot right now, but I would expect, or I would anticipate, or I should say Crown anticipates significant settlements starting to come in roughly 6 to 8 to 10 weeks. So, and the exact timing is hard to say, but in talking to Crown literally just earlier today, they said there's virtually not a single insurance company in which they're discussing the underpaid, in which they are not open to discussing settlement. And the reason is they don't want to be labeled as having fraudulent behavior. And the reason that might come about is because Crown is representing dozens of laboratories. So when they go to the insurance company, there might be 3 or 4 other laboratories in 3 or 4 other states that they're representing at the same time. And they're basically going to Mr. Insurance Company and they're saying, hey, you have 5 labs in 5 different states. You underpaid all 5. That's a systematic pattern of fraudulent behavior. Insurance companies don't want any part of being labeled that way, not to mention you could end up with trouble damages. So they're all looking to settle. That's all in the process right now. I wish it would go faster, but I believe we're now at the late stages where settlements are going to start happening soon. And that's why now I'm getting significant interest from financiers who actually want to finance in a significant way. If we get in a large block of money directly tied only to Crown Medical settlements, that would be non-dilutive to our company. That would be huge. We could clean up a lot of debt. We could grow Nebula Genomics. There's so many things we could do. We'd be a completely different company. And of course, we're talking about numbers that are, multiples, potentially, we're talking about numbers in settlement that could be 10 times the entire market cap of the company. Thank you for the question. What's the next one, Craig?
Does the increased visibility shared in today's press release adjust downward the $50 million number in expected collections?
No, actually just the opposite. What I'm talking to Crown Medical about is the internal numbers at Crown are actually greater than what I have reported. I just don't want to get so aggressive. Does it really matter when we have I don't know what we have, a $2 or $3 million market cap? Does it really matter whether we ultimately collect $40 million or $50 million or $60 million? We're talking about a stock price that would probably go up 10 times, 20 times from where it is right now, just on that alone. So I don't need to get that specific, but what I can tell you is just on the dollar amount that we anticipate collecting on the underpaid, it's many tens of millions of dollars. It's over $30 million. So, and that to me is very high probability of collection just on that alone. And they also expect to collect on the rest, but they believe that some of that will take longer. Not that they won't collect on it, but it will take longer because insurance companies on some of these will drag their feet a little bit more. Next question, please.
If Be Smart had to be sold immediately in a distressed or fire sale scenario, what valuation range might it command?
That's a great question. I wish I knew the answer. And I don't want to put numbers out there because we are now approaching, and we've lined up roughly 70 targets, actually more than 70 targets that we are going to reach out to. And I don't want to put numbers out there, but I can tell you that transactions for similar types of diagnostic tests has been in the tens of millions of dollars. I think we have something really unique here. I don't want to put numbers out there, but whatever it is, if we were to sell this and collect a royalty, we're talking about any valuation could be 10 or 20 times the current value of the company. So I'm putting it out there also because, look, everybody knows we're tight on capital. We've been tight on capital for the last year. It's one of the reasons I entered the convertible debt in the first place. It's just unfortunate that it was convertible so quickly, and it's such poor timing. But in any event, if we have a liquidity event, then instead of taking on debt, we can clean up debt. Instead of potentially taking on dilutive equity, we can actually buy back stock and reduce the number of shares outstanding. There's a lot you can do once we have a liquidity event. And I certainly know how to do that. I have a history of having liquidity events in the past. For instance, when I sold the Cold-EEZE brand, for instance, when we first ramped up the COVID testing, in both instances, I was buying back stock. I was paying out cash dividends to shareholders. I would love the opportunity to be in such a position again.
This person has a follow-up. Under the same scenario, Ted, what valuation range might Nebula Genomics command?
Sure. So that's a good question. I really like this business. I am just going to highlight to you that the people running it right now, who I won't name, but they have done a phenomenal job in restructuring the business and making it into a profitable business that can grow and have legs. And I think it has a very bright future. So would we sell it? Yeah, if the right buyer comes along, it's possible. We actually have a banker who's dying to work on selling it and is sort of informally exploring that. But at the same time, I also think it's a great business. If we have a liquidity event and we clean up the company and we clean up the cap structure, then actually that's a business I'd like to keep and grow into something that could be very large and very successful.
Hello, thank you for hosting this update. As a significant long-term shareholder, I appreciate the transparency regarding the company's recent restructuring. I have a few specific questions regarding the protection of shareholder value on cash distributions regarding that $50 million in insurance claims through Crown Medical. If the company recovers a significant portion, such as 10 million to 25 million, will you commit to the special cash dividend for current shareholders as previously discussed?
Clearly, that's a question from somebody who has enjoyed cash distributions in the past. Look, I'm not in clearly the company is not in a situation. I mean, this is such a hypothetical situation. I'd rather not talk about it. Let the money come in. Let's see how much debt we have. Let's see what our overhead is. Let's see what our expenses are. Let's see how we're going to grow the Nebula business, et cetera, before we start talking about cash dividends. But as I alluded to, I am shareholder friendly. I always have been. It's unfortunate we went through this dramatic dilution phase. It's really disappointing to me. And understand, I believe I was the largest shareholder in the company, and it literally destroyed my equity. So for all of those of you that are hurting out there, just remember I hurt more than all of you. And what's interesting is most of the shareholders have actually, I'm shocked, have been very kind to me. I've one long-term shareholder who turned on me, which is really disappointing. I won't get into it. And the reasons they gave, I've never understood. There's no reality to it. But you know what? When a stock price goes down and people lose money, they drum up excuses. What's interesting is I've invested in other companies where when the stock price crashed, I got really upset with management and jumped to all sorts of conclusions. And unfortunately, when people do that towards me, I'm the largest shareholder of the company. All I wanted was what was best for the shareholders. It's really disappointing how this has turned out. But I have a history of restructuring and turning around companies. I believe I'm going to turn around this company. We're at the tail end of turning it around. I have to get through, a little more financing here, and then I anticipate significant liquidity events in the coming months, if not potentially even in the coming weeks.
A recent press release stated that around 50 of the 250 engaged insurers by Crown Medical Collections were in, quote, advanced settlement posture, end quote. Does this mean they have essentially agreed to pay ProPhase Labs with only the final dollar amount remaining under negotiation?
That's a great question that is so fine tuning it. First of all, the number is now greater than 50. That number was reported to me a couple of weeks ago. Then we put it in the press. That number is growing every day. But understand it's a very dynamic situation. And so when you say the only thing left is the dollar amount, basically for the underpaid claims, Crown believes virtually all of them are going to settle. And all of them are going to settle at a high percentage. Interestingly, um, somebody asked me, and understand, I have financiers that are studying this all very, very closely, and they were asking, well, isn't it possible, a lot of insurance companies dig their heels in? And the answer is absolutely, but not the ones on the underpaid claims, because the claim was already paid. It means it's a legitimate claim. They can't now say it's not a legitimate claim and should be paid. And then you have the government with laws out there saying you have to pay and you have to pay the full amount. So they have nowhere to turn. So it's really an interesting situation. They're not digging their heels in at all, from what I understand, and in terms of what's being reported. In terms of when you're at the point, they're in, late stage settlement negotiations to say, well, did they just not settle on the amount? These things all take time, and that's the frustrating part. But by time, we're not talking about weeks. By weeks, it could be a month or two, but we're not talking about 6 months before there's settlements. We're talking about 6 weeks, 3 weeks before they start. So we'll see. I don't know the exact time frame. I really don't, but I'm excited. But by the same token, that's why I'm working with financiers, potentially get a large block of money now. Against that, I don't care if they get a return from the Crown Medical Collections. It means non-dilutive equity to our company, and it will be a very, very different company if that happens. That could happen in weeks. Will it? I don't know, but that's what I'm working on, among other things.
Following the uplist to the OTC ID tier, OTC Markets updated shares outstanding to approximately 9.5 million. Since the January 5th, 2026 update, there has been significant selling pressure. Do you have insight into the source of this pressure, and what is the current shares outstanding figure?
Okay, so the number is going to be a little larger. So a couple of things. First of all, when the $3.8 million converted, didn't all convert at once, then it was less than that. Maybe it was 3.4 million, and then more converted after that. Each time there was conversion, that's more shares coming on the market. Number two, because most of those shares were sold into algorithms, those algorithms that have to then resell. That's just a computer buying and selling stock. So then the computerized program, on behalf of whoever owns, the computerized program, whoever they're managing money for, has to turn around and sell that stock at some point. They can't all sell it at once. There are no buyers for it. So that feeds out over time. That's what was creating the pressure. It's number one. Number two, the convertible debt didn't all convert. There was still a little left. That's what I reported. I think I reported last month. There was still, I don't know, $400,000 or $500,000 left. As of maybe a couple of weeks ago, there was only $100,000 left. And now I'm not positive. It may be down to virtually nothing. But that's been the selling pressure. Now, on top of that, I came out with very positive news about a week ago about Crown But then at the same time, I think we filed on registering an ELOC, and that's an equity line of credit with generating alpha. To be clear, however, we don't have access to that. So first of all, we don't have an ATM anymore because we went to OTC, and we don't have an ELOC right now. So we're not selling any stock on the ELOC, and we would have to do an S1 registration, which could take quite some time before we use the ELOC, if we use the ELOC. And to be clear, it's not clear that we're ever going to use the ELOC, but I think it's important. Every company should have an ATM or an ELOC, preferably an ATM, but because we're on OTC, we can't have an ATM. Legally, you can do it if the brokerage firm will take responsibility for it, but most brokerage firms weren't. So at a minimum, I did want to set up the ELOC. With the ELOC, there were commitment shares involved, although they are restricted, so I don't believe that they are on the market. So, but you also had pressure from investors who can't hold OTC stocks. There's certain brokerage firms that can't hold OTC stocks. So all that's been filtered into the marketplace. That's all getting cleaned up now. I hope that answers your question. I'll have more to say about this in the coming weeks. But I think that gave everybody a pretty good indication. But to be clear, this is all a disconnect between, stock price, listing OTC versus NASDAQ versus underlying value of the company. The underlying value of the company didn't change, except, and so if you think about it, the market cap should not have changed. So if you have twice as many shares outstanding, then the stock price should have dropped in half, or 3 times as many shares outstanding, dropped by 2/3. But the market cap should have remained roughly the same. In fact, potentially it should have increased by $3.8 million, since we have 3.8 million less debt. Of course, it didn't happen in real life. I have a background in all of this. I understand exactly what happened. It's really disappointing, but now it's time to work out of it.
Ted, follow up here about the exercisable warrants. How many of them remain outstanding, and what is the average exercise price?
I think we're not talking about warrants. There are no warrants that are in the money. You're talking about the convertible debt. I think the convertible debt is virtually all done. There may be, and I don't want to guess, but maybe there's $50,000 or something like that. All right, which may or may not have been converted. I don't need to get that specific. It's a rounding error. So, but the problem is $50,000. With where a stock's trading, you could be talking about a few 100,000 shares of stock. So all of a sudden, somebody, you look and you see 50,000 shares of stock for sale, and people say, oh, but you got to understand, we're not talking about a large dollar amount at all. Any sponsorship that comes into our stock, all of that gets cleaned up. This stock could go up 5 times and still be significantly undervalued. I know I'm talking about stock price probably more than I should as a CEO, but that's just my perspective. Having said that, we are tight on capital, and it's a very frustrating situation to have an undervalued stock price on OTC with a small market cap and needing capital. It's a messy position to be in, but I also anticipate that's going to dramatically change, literally, potentially within weeks. We have so many potential different liquidity events. So we just have to see. Nothing is guaranteed. Nothing is 100%, but we have multiple liquidity events, any one of which will dramatically change the value of our company, and in all likelihood, the stock price as well.
With most of the convertible debt now issued, is some of the stock decline attributable to the potential 76% dilution in the merger with ABL? How certain is the 76% dilution figure and the $10 million special dividend? Can those figures change in the final agreement?
Sure. So nothing related to the ABL deal has anything to do with shares outstanding or dilution or any such numbers. That's simply a non-binding LOI. It's a deal we may or may not even do, but we have not been issuing shares for it. So there's nothing going on with a potential ABL merger that I think has anything to do with the current stock price or with dilution or shares outstanding. Greg, what's the next question?
How much of the money, how much of this money will ultimately be reserved for shareholders versus being allocated toward operating expenses? Will the $10 million credit line from Generating Alpha be used for operations instead?
Sure. So again, generating alpha, think of that as an ELOC, an equity line of credit. What that basically is, it's in our control. If we ever use it, we may never use it. If we use it, we simply write an email or I call generating alpha and I say, hey, we need $50,000 today. So here's $50,000 worth of stock. Send us $50,000 and they will. That's how an ELOC works. And it works based on you can sell up to whatever the calculated formula is. It's based on the last several days of trading, the volume weighted average price, and how much you can sell. So that's if we use it. But again, we can't even use that until we do an S1 registration, which we have not done. So what's interesting is I filed an 8K on the ELOC. The stock price dropped dramatically, but we're not even using it. So it was all psychological and it's unfortunate. And I'm even questioning, maybe I shouldn't have even filed or entered the agreement from the point of view that it just scared shareholders and it's, probably cut the stock price in half, which is unfortunate. So, but having said that, we are not currently using the ELOC. We could not use the ELOC even if we wanted to. We will not be able to until we file an S1. We will likely file an S1 at some point in the coming weeks. But even when we do, it doesn't mean we're going to use it. I think it's important that every company, every public company, should either have an ATM or an ELOC, if for no other reason, just to use opportunistically. If our stock goes up 10 times on big volume and I can pick up a quick $1 million, maybe I will if we need the money, if it helps us. But having said that, we're not using it now. There's no dilution from it now, other than we did issue commitment shares, but even the commitment shares are restricted stock. And so really it was a knee-jerk reaction to a filing as opposed to anybody actually selling stock, because we were using the ELOC.
Rather long one here, Ted.
Try and make it shorter or go on to the next one because I think we're going to be out of time soon.
If you're willing, Ted, we could go to 5:05 p.m. Eastern. That would
Okay.
give us 10 more minutes. Okay.
I would love to get through as many questions as I can. I love answering the
Absolutely.
questions because I really want to help out the shareholders if I can.
Okay, I'll read this fast. You've mentioned before that you could either sell the Nebula Genomics business or scale it yourselves. I agree that the database is valuable and its worth can be debated, but I have a question on the scalability. To be blunt, there is a Reddit thread dedicated to Nebula Genomics customers, and a lot of them seem to have issues with getting their DNA kits results and getting refunds. Is this accurate, and could you provide some clarity as to why this might be?
This is always true with all companies in the business. It has to do with lab sequencing. It has to do with issues with the specimen itself. What happens is these are kits that are sent to people's homes. They then have to collect the specimen themselves. They then have to send it in. A lot of times it's not a great specimen. It then takes time. We have to send it to a lab. The lab has to sequence it. Sometimes the lab says it's a faulty specimen. Sometimes it says, let us sequence it again. That could add more weeks to it. Then after the second time, it says, this just isn't a good enough specimen. We'll have to get a new one. All that can take a long period of time. We're selling thousands and thousands of tests. So there's always going to be people complaining that they haven't gotten their results or what's going on here. Those are the ones you hear about. You don't hear about the people that said, oh my God, what a great service, what a great product. The results, not, the database that we then use to build the 325 health reports and growing. I mean, we have a phenomenal reporting service. Does it from time to time take time to get your results? Absolutely. But once you get your results, we have this phenomenal health reporting system where you learn all about diseases that you're predisposed to based on your genetic makeup. This is incredibly popular. In the old days, people just wanted an ancestry test. We provide that as well. But now we provide the most in-depth health-related information. We believe we will have one of the best, if not the best platforms in the world for providing the health reports. So that's always going to be an issue, but it's one you have to live with.
Follow up. Are the entities currently in bankruptcy proceedings the same entities providing these testing services?
No, they have nothing to do with each other whatsoever. Our genomics business, we built a laboratory for it, and then we shut down that lab, and we now send out our sequencing to some very sophisticated labs that were just doing great with. Our COVID testing business was a completely separate lab. At one time, it was in the same location, meaning it was the same physical address. One of them was anyway. We had two COVID testing labs. One was in Garden City, New York, where our genomic testing was being conducted. Currently, our genomic testing is being conducted by another lab. And our COVID testing, we're not currently doing COVID testing anyway, but the COVID lab subsidiaries were called ProPhase DX New York, ProPhase DX New Jersey, had nothing to do with Nebula Genomics and DNA Complete.
And a final follow-up, is there a laboratory backlog contributing to these reported delays?
There's always going to be some backlog from time to time, and that's just the nature of the business. I think I already answered that question. Thank you.
Has ProPhase Labs moved out of 711 Stewart Avenue?
Yes, that was done many months ago. It saves us an enormous amount of money. And when we restructured the business and when we shut down the genomics lab, there's no reason to have 30,000 square feet of space. I would think the shareholders would be incredibly happy that we restructured and cut that overhead out of the company.
What are the names of the genomics labs you're currently using?
That's proprietary information. I would never provide that.
Have you made any progress with appealing to the NASDAQ for relisting? What is a reasonable time frame you would be relisted?
Sure. So our approach would be, first, we need to have a liquidity event, which will improve our market cap, which will improve our balance sheet and financial structure. And then we have to decide, maybe we go to NYSE first, or we just have to see. So this will be in steps. I'm looking forward to that, but it's not anything that's happening in the next couple of months, because with our stock price trading where it is, NASDAQ's not going to.
Given that the BE-Smart esophageal cancer test demonstrated a 100% sensitivity, but only a 39% specificity, what do you
To
think is the
accept this, right?
likelihood?
Greg, did I
Yes.
lose you? I was still answering the last question.
I'm sorry. Sorry. Please go ahead.
Yeah, I don't understand what happened. Unless I had an internet connection. Oh, you really confused me just now, Craig. What was the last question that I was in the middle of answering?
Last question was da, 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 da. Appealing the NASDAQ relisting. What's the reasonable time frame?
Oh, yeah, yes. No, so I think I pretty much answered that. Very simply, the only reason we were delisted was stock price. We performed on every other category or compliance issue related to NASDAQ. That's what makes all of this so frustrating, is it was just stock price. All right. And it was the combination of the timing of the reverse stock split with the exercise of the and conversion of the convertible debt. It was just, very complicated. All right. All right. Now we can go to the next question about our esophageal cancer test.
Sure.
Actually, would you mind skipping that one and go to the next question after that one?
Absolutely.
Only because it's a complicated scientific question and it's not for the school.
Yeah. Can the company authorize the transfer agent to provide updated shares outstanding figures directly to shareholders?
I follow whatever compliance suggests, whatever rules you file with compliance. We've had some issues because we have one reporting service that's getting their data from some really old numbers. It's still providing numbers prior to when the convertible debt was converted. You should assume, and as I said, we issued commitment shares on the ELOC, even though they're restricted. So you should and please don't quote me on this number, but I will give you a higher number than what you've heard before. Use a number around 11 million shares outstanding. It might be a little bit more. I don't know what the exact number is. That's an approximate. Please don't quote me on that number. The only reason I'm saying that number is when somebody tells me, they're reading 5 or 6 million shares outstanding, that's before all the convertible debt converted and other things. And it's just not an accurate number. And I don't want anybody to be misled. That's not to say that 11 million is the exact number.
Ted, I know you covered this earlier, but a lot of people are independently writing in about it. They want to know about the number of shares out and how many you own.
Yeah. So I owned, I don't know what the number was before. It was off the top of my head, it was it was in the high 3 million. It was close to 4 million shares of stock. At one time, that stock was worth $20 million or more. Now it's worth a few $100,000. So just imagine sitting in my chair having gone through that. So you can say, why am I even doing this right now? All the pressure. I'm under pressure for 24/7 working on the company. But this is what I do. What's interesting is when I took over control of the company through a proxy contest in 2009, 2010, I had to go through the same thing. I had almost no money. It was all locked up in the company. I went through a proxy contest. I suffered through two federal lawsuits, couple $1 million in potential legal fees, which I wouldn't have been able to pay. And I said to myself, why am I doing this? I'm doing this because it's the right thing to do. Well, that's what I'm doing right now. I'm 100% focused on the company to turn it around. It is a very, very difficult position I'm in. It's unfortunate that one of my largest long-term shareholders turned on me. It's disgraceful. But even without the support of long-term shareholders, I'm turning around the company because it's the right thing to do. If you're a shareholder now and you were a shareholder before, you can add to your position right now. You can buy 10 times as much stock for the same price. And if I'm even modestly successful this time around, you can still make a lot of money and you can be thanking me a year from now. Having said that, there are no guarantees in life. There never have been, but I've been successful in turning around and restructuring companies for 40 years. And I know this company incredibly well. We have significant underlying assets in the company. We might have 50 or $100 million in underlying assets in the company. The problem is when you have a $2 or $3 million market cap, you're OTC and you have debt, it's very difficult to raise debt. And in order to raise equity, it's very difficult to raise equity because you don't have a market cap to raise equity and you don't have liquidity. So I'm caught sort of between a rock and a hard place. On the other hand, we have potential very large liquidity events. They're right around the corner. So I am going to do everything I can to bridge where I am now to where we're going to be when we have a liquidity event. And those liquidity events could be soon. If a financing comes in and says, here's $5 or $10 million against your Crown Medical, it's not debt really to us. It's only paid back by Crown Medical collections. And it's not dilutive equity. We're home free. So it could happen from a financier coming in. It could come in from actual collections, although that's a couple of months away. So that's not going to help me, shorter term. So we have those two. There's the sale of the Be Smart esophageal cancer test, or I could do, a new convertible debt deal. But this time around, if I do a convertible debt deal, understand if it's not convertible for 6 months and we have liquidity events in whether it's in 1 month or 2 months or 3 months, it'll be around the year. We'll just pay off the convertible debt. So that's also a path. As I said, we filed on an ELAC, but we can't use that till we file an S1, and that's not our game plan anyway. So we're still looking at other opportunities. We could file a prospectus against our S3, which we might, to pick up some money here or there. So I'm looking at all avenues. I'm working round the clock. I will be successful. And I hope that for those of you that have been with me long term, you might want to consider buying stock, average down your position. And when we turn the company around, I think you'll be very happy. Thank you,
Thank,
Craig. I think we're probably
thank,
over time now, but I appreciate you letting me stay over.
well,
I answered as many questions as I could. Go ahead, Craig. I hand it back over to you.
well, that is just a fabulous place to end. And yes, we've gone over time for our many participants today, and we thank them all. For more information on ProPhase Labs, reach us at 1-800-RedChip or email us at prph@redchip.com. Please visit the information page created by RedChip for ProPhase Labs. It's prphinfo.com. There you can view and download today's investor presentation and fact sheet and sign up for news alerts on ProPhase. Watch Small Stocks, Big Money, RedChip's program featuring exciting small cap companies, including occasionally ProPhase Labs, every Saturday night at 7 p.m. Eastern on Bloomberg USA. And finally, tomorrow at 9:30 a.m. U.S. Eastern, don't miss RedChip's special webinar, FinTech and Digital Asset Treasuries, from modern payments to strategic digital asset management. Again, that webinar will take place tomorrow from 9:30 a.m. to 4 p.m. register for that event and for all RedChip webinars at redchip.com/events. Thanks again to our many participants today, and thanks as always, Ted.
Thank you, Craig. Thanks for hosting. Well, RedChip, you're doing a great job. I really appreciate this opportunity. Thank you all shareholders. I appreciate your support.